Let's start with a question that makes most Wall Street analysts uncomfortable. If the US dollar is the invincible king of the global economy, the ultimate safe haven, the bedrock of modern finance, then why are the world's two largest superpowers frantically dumping it? You aren't seeing this on the nightly news. They'll talk about inflation, they'll talk about interest rates, maybe they'll mention a trade war. But they are missing the tectonic shift happening right beneath our feet. While the Western world is distracted by the noise of day-to-day politics, something historic is happening in the vaults of Moscow and Beijing. It is a silent migration, a massive, systematic accumulation of the only asset that has outlived every empire in human history: gold. But this isn't just about buying shiny metal. This isn't about jewelry or investment portfolios. This is a calculated strategic offensive. Russia and China aren't just protecting their wealth. They are building a weapon. A financial weapon designed to sever the arteries of American influence and end the era of the petrodollar. Today, we are going to peel back the layers of the de-dollarization strategy. We are going to look at the data the mainstream media ignores, the shadow purchases happening off the books, and the terrifying reality of what happens when the world stops trusting the greenback. Welcome to the endgame of the fiat experiment. To understand why this gold rush is happening now, we have to go back to February 2022. This was the catalyst. When the tanks rolled into Ukraine, the United States and its European allies did something that had never been done on such a scale before. They weaponized the global financial system. In a matter of days, they froze over $300 billion of Russia's central bank reserves. Now, putting aside the morality or the politics of the war, look at this strictly through the eyes of an economist or a foreign leader. The message sent from Washington was crystal clear. Your dollars are not yours. They are yours only if we allow you to keep them. If you cross us, if you disagree with our foreign policy, we can turn off your bank account. For nations like China, Saudi Arabia, Brazil, and India, this was a cold shower. It was a wake-up moment. Beijing looked at Moscow and thought, if they can do that to a nuclear power like Russia, they can certainly do it to us if we ever make a move on Taiwan. The trust was broken. The US dollar, which relies entirely on the full faith and credit of the US government, suddenly carried a massive counterparty risk. And in the world of finance, when risk spikes, smart money moves to safety. And what is the only asset that has no counterparty risk? The only asset that you can hold in your hand, that requires no internet connection, no SWIFT system, and no permission from the US Treasury to trade? Gold. This is where the story gets interesting. Because if you look at the official numbers, China is buying gold. But if you look at the unofficial indicators, China is inhaling it. Officially, the People's Bank of China, PBOC, has been on an 18-month buying spree, adding hundreds of tons to their reserves. That alone is significant. But veterans in the gold market know that the official numbers are just the tip of the iceberg. China is a master of shadow banking and discrete accumulation. We know that massive amounts of gold are flowing into China through Hong Kong and Shanghai, far exceeding what is reported on the central bank's balance sheet. Why hide it? Because if China announced tomorrow that they hold 20,000 tons of gold, dwarfing the US reserves, it would cause immediate panic in the currency markets. They are playing the long game. They are accumulating quietly, keeping the price relatively stable, filling the war chest before they flip the switch. And they aren't alone. Russia, effectively cut off from Western currencies, has aggressively pivoted to gold. They are the second largest producer of gold in the world. Instead of selling that gold into the London market for dollars they can't use, they are keeping it. They are domesticating their production. The Russian ruble, despite the sanctions, has maintained a level of resilience, partly because the markets know there is hard backing behind the scenes. But here is the strategic genius of the Sino-Russian partnership. It's not just about hoarding, it's about trade. For 50 years, the US has enjoyed an exorbitant privilege. We print pieces of paper, and the world sends us cars, electronics, oil, and raw materials. This works because the world needs those pieces of paper to buy oil. This is the Petrodollar system. However, China and Russia are actively building an alternative infrastructure. They are trading energy in yuan and rubles. But there is a problem with that. A Russian oil exporter might accept Chinese yuan. But what if he doesn't want to hold yuan? He worries about China's capital controls. He worries about devaluation. Enter gold. Gold is becoming the settlement layer for a new, non-dollar trading bloc. We are seeing the early stages of a system where trade imbalances between the BRICS nations, Brazil, Russia, India, China, South Africa, and their new members, can be settled in physical gold. This effectively bypasses the US banking system entirely. If China can pay Saudi Arabia for oil in gold, or in a digital currency backed by gold, the demand for the US dollar evaporates. And when demand for the dollar evaporates, the value of the dollar collapses. Let's pause for a moment and look at the other side of this equation. Why is the dollar so vulnerable right now? You cannot talk about the rise of gold without talking about the fall of fiscal responsibility in Washington. We are currently sitting on over $34 trillion in national debt. We are adding $1 trillion to that debt every 100 days. The interest payments alone on our debt are now higher than our entire defense budget. Think about that. We spend more on paying interest to bondholders than we do on the Army, Navy, Air Force, and Marines combined. For decades, countries like China bought our debt. They bought US Treasury bonds because they were risk-free. But with inflation running hot and the US government spending like a drunken sailor, those bonds are no longer a safe store of value. They are certificates of confiscation. You lend the US government money, and they pay you back in dollars that are worth less than when you lent them. China knows this. That is why they are dumping US treasuries at a record pace. They are selling American debt and using the proceeds to buy hard assets. They are swapping paper promises for physical reality. This is a classic run on the bank, but at a geopolitical level. China is cashing out of the American Ponzi scheme before the music stops. The psychological aspect of this cannot be overstated. Money is, at its core, a shared illusion. It works only as long as we all agree it has value. Throughout history, when the dominant empire debases its currency to fund wars and welfare, the rest of the world eventually loses confidence. It happened to the Romans. It happened to the Dutch. It happened to the British. And the math says it is happening to us. The difference this time is the speed. In the digital age, confidence can evaporate overnight. Let's look closer at the mechanism of how this gold standard 2.0 might work. We aren't going back to men carrying sacks of coins. This is 2024. The likely scenario is a digital currency, a central bank digital currency, CBDC, issued by the BRICS bloc, which is partially backed by gold. Imagine a currency that has the speed of a crypto transaction, but the stability of gold. If you are a developing nation in Africa or South America, and you have to choose between holding US dollars, which can be weaponized against you and are losing value, or a gold-backed BRICS currency, the choice becomes dangerously easy. This is the nightmare scenario for the Federal Reserve. If the Global South stops using the dollar for trade, all those trillions of dollars currently circulating overseas will come flooding back home. That is a concept called repatriation. Right now, we export our inflation. We print money, and it goes to Japan, to Europe, to China, to the Middle East. But if they stop using it, that money returns to the US domestic economy. The result? Hyperinflation. Not the 8% or 9% we saw recently. We are talking about a structural, permanent destruction of purchasing power. The cost of imports, cars, electronics, clothes, coffee, would skyrocket. The standard of living for the average American would plummet. This is why the gold buying by Russia and China is not just an economic diversification. It is a declaration of war on the American standard of living. Now, skeptics will say, gold is a barbarous relic. There isn't enough gold in the world to back global trade. That is a common misconception. There is always enough gold. It just depends on the price. If gold is repriced to cover the amount of paper money in circulation, we aren't looking at $2,000 or $2,500 an ounce. We are looking at $10,000, $15,000, maybe $20,000 an ounce. And this is exactly what some analysts believe China is positioning for. A global reset where gold is repriced, effectively devaluing all fiat currencies against it. If China holds 20,000 or 30,000 tons of gold when that reset happens, their balance sheet becomes the strongest in the world. They essentially capitalize their financial system overnight, while the West is left holding worthless paper. We also need to talk about the Shanghai Gold Exchange. For years, the price of gold was determined in London, LBMA, and New York, COMEX. These are paper markets. They trade futures contracts, not necessarily physical metal. China has been very vocal about wanting pricing power. By draining physical metal from the West and moving it east, they are tightening the physical supply. There comes a breaking point where the paper price, the manipulated price, and the physical price disconnect. When that happens, the exchanges in London and New York will fail. You will see a failure to deliver, and the true price of gold will be discovered in Shanghai. At that moment, the financial center of gravity shifts from west to east. So, where does Russia fit into the technical side of this? Russia provides the resources. You cannot run a modern economy without energy, steel, fertilizer, and food. Russia is a commodity superpower. China is the manufacturing superpower. Together, they are creating a closed loop. I buy your energy, you buy my goods. We settle the difference in gold. Where is the US in this loop? We are on the outside looking in. We become the customer of last resort, paying with a currency nobody wants. This brings us to the concept of the Thucydides trap. History teaches us that when a rising power threatens a ruling power, conflict is almost inevitable. But in the nuclear age, direct military conflict is suicide. So the war is fought in the shadows. It is fought with chips, with sanctions, and most importantly, with money. The accumulation of gold is the defensive fortification. China is building a financial Great Wall. They are insulating themselves so that when they finally make their move to dethrone the dollar, they can withstand the shockwaves. Let's look at the internal propaganda within these nations. Both Putin and Xi Jinping regularly talk about sovereignty. In their view, you cannot be a sovereign nation if your savings are held in your enemy's currency. This is a logical argument that resonates with many nations in the global south who feel bullied by IMF policies and Western sanctions. We are seeing a bifurcation of the world. The West, US, Europe, Japan, Australia, and the rest are buying gold. Central bank gold buying hit historic records in 2022 and 2023. It wasn't just China. It was Poland, Singapore, Turkey, India. Why is a NATO member like Poland buying gold? Because they see the writing on the wall. They know the neighborhood they live in. They know that when push comes to shove, paper promises evaporate. What makes this situation so dangerous for the American investor is the level of complacency. The average American portfolio is heavy on tech stocks and bonds. It is optimized for a world where the dollar is king and inflation is low. It is completely unhedged against a monetary regime change. If you talk to the average financial advisor, they will tell you gold is a pet rock. They will tell you to stick to the S&P 500. But look at what the central banks are doing, not what they are saying. They are the insiders. They run the casino, and they are taking their chips off the table and buying metal. This divergence between the smart money, central banks, and the retail money, us, is the widest it has ever been. Let's dig deeper into the petroyuan phenomenon. Recently, we've seen Saudi Arabia engaging in talks to sell oil to China in yuan. This is the holy grail for Beijing. If they can break the petrodollar monopoly, the floodgates open. But China has a problem. Nobody trusts the CCP. Nobody wants to hold billions in yuan, subject to the whims of the Communist Party. This is why the gold convertibility clause is rumored to be part of these deals. The promise is, take our yuan for your oil, and if you don't want to keep it, you can immediately convert it to gold on the Shanghai Exchange. This turns the yuan into a placeholder for gold. It effectively creates a gold-backed trade mechanism without officially returning to the gold standard. It's a backdoor return to sound money, designed to bypass the US Treasury. Now, consider the US response, or rather, the lack of it. The US government is in a bind. If they raise interest rates high enough to defend the dollar and make it attractive again, they crash the US housing market and bankrupt the government due to interest payments. If they lower rates to save the economy, inflation roars back, and the dollar loses value even faster, accelerating the move to gold. This is checkmate. The Fed is trapped. And our adversaries know it. They are simply waiting for us to make a mistake. They are waiting for the next banking crisis, the next fiscal cliff, the next bailout. Every time the Federal Reserve turns on the printer, China and Russia smile and buy another ton of gold. There is also a technological angle here that connects to the surveillance state. China is rolling out the ECNY, digital yuan. This is a programmable currency. It gives the state total control. But to sell this internationally, they need to give it legitimacy. Backing it with gold reserves gives it a veneer of stability that the unbacked US dollar lacks. It is a brilliant marketing strategy. Our digital tyranny is backed by gold. Their democratic freedom is backed by debt. Which one does a cynical global market choose? We must also address the narrative of de-globalization. The era of just-in-time supply chains and frictionless global trade is ending. We are entering an era of resource nationalism. In a world where supply chains break down, he who has the gold and the commodities makes the rules. Russia has the energy. China has the factories. America has financial services and intellectual property. But you can't eat IP, and you can't heat your home with a derivative contract. The pivot to gold is a pivot to tangible reality. So, what is the timeline? These things happen slowly, then all at once. We are currently in the slowly phase. The accumulation is steady. The diplomatic agreements are being signed. The BRICS membership is expanding. The all-at-once phase will likely be triggered by a crisis. A sovereign debt crisis in the West, a new war, or a sudden collapse in the bond market. When that moment comes, the curtain will be pulled back. We will see who really has the gold, and we will see who has been swimming naked. The US government assumes that because the dollar has been the reserve currency for 80 years, it will be for another 80. This is arrogance. The British pound sterling was the global reserve currency for over a century. It was as good as gold. until it wasn't. It took less than a decade for it to lose its crown once the fundamentals rotted away. The fundamentals of the US dollar have rotted. We have abused the privilege. We have weaponized the SWIFT system. We have printed our way into oblivion. And now the wolves are circling, and they are made of gold. This isn't about being anti-American. It's about being a realist. It's about looking at the chessboard and acknowledging that our opponents have made a move that we have no easy counter for. If China and Russia succeed in creating a credible, gold-backed alternative to the dollar, the standard of living in the United States will change within a generation. The America we know, the one that can consume more than it produces because the world subsidizes us, will cease to exist. We will have to become a normal nation. We will have to produce what we consume. We will have to balance our budget. And for a society addicted to debt and cheap imports, that transition will be painful. It will be chaotic. So, what does this mean for you, the individual watching this video? It means that the safe path is no longer safe. Holding all your wealth in dollars or dollar-denominated assets is a bet that China and Russia will fail. It is a bet that the US government will suddenly become fiscally responsible. It is a bet that history will not repeat itself. That is a bold bet to make with your life savings. The billionaires are diversifying. The central banks are diversifying. The nations of the global south are diversifying. They are moving into tangible assets. They are moving into gold, land, commodities, things that cannot be printed by a politician or frozen by a sanction. You need to ask yourself, why are they doing this? Do they know something I don't? Or are they simply looking at the math that the mainstream media refuses to show you? The trend is undeniable. The flow of gold from west to east is the defining economic story of our decade. It is the canary in the coal mine for the US empire. We are witnessing the greatest transfer of wealth in history, disguised as central bank bureaucracy. It is happening quietly, methodically, and relentlessly. China and Russia are betting on the collapse of the paper dollar, and they are stacking the deck to ensure it happens. The question is, when the music stops and the dollar loses its chair, where will you be standing? Let's get granular for a minute. I want to explain exactly how this impacts the treasury market, because this is where the rubber meets the road. When China runs a trade surplus with the US, which they do massively, they end up with dollars. Historically, they took those dollars and bought US Treasury bonds. This recycled the money back to Washington, keeping our interest rates low. This was the virtuous cycle. We buy their stuff, they buy our debt. But that cycle is broken. China is no longer recycling those dollars into treasuries. They are using them to buy hard assets globally, mines in Africa, ports in South America, and gold. This means there is less demand for US debt. When demand for debt goes down, the yield, the interest rate, must go up to attract buyers. This is why mortgage rates in the US are spiking. This is why credit card rates are spiking. It is not just the Fed. It is the fact that our biggest customer, China, has stopped buying our product, debt. If the US government has to offer 6%, 7%, or 8% interest to get anyone to buy its bonds, the interest payments on the national debt will consume 50% of all tax revenue. That is a mathematical death spiral. You cannot run a country like that. The only way out for the US is to print more money to buy its own debt, yield curve control. And that is the trigger for hyperinflation. China knows this. They are forcing the US into a corner where we have to choose between default, not paying, or hyperinflation, paying with worthless money. By hoarding gold, China is ensuring that when that crash comes, their currency remains standing. They are building a life raft while we are drilling holes in the hull of our ship. And consider the ghost gold. There is a theory among forensic economists that China has been buying up domestic gold production for 20 years without reporting it. China is the world's largest gold producer. If they haven't exported any of it, and they haven't reported buying it, where is it? It is likely in the vaults of the State Administration of Foreign Exchange, SAFE, held off the books of the PBOC. Estimates suggest China could actually hold upwards of 20,000 tons. The US holds 8,133 tons. If China reveals this stockpile, the yuan instantly becomes the most solvent currency on Earth. It would be a geopolitical checkmate. Now, let's look at Russia's specific role again. Russia is the battering ram. They are the ones taking the hits, breaking the systems, testing the sanctions. They have proven that a G20 economy can survive being cut off from the dollar. This has emboldened others. Look at the recent moves by Malaysia, by Brazil, by Saudi Arabia. The fear of the dollar is gone. The reverence is gone. When Saudi Arabia said, "We are open to trading in currencies other than the dollar," that was the death knell of the 1974 deal that created the petrodollar. It is over. We are just watching the inertia play out. The de-dollarization narrative is often dismissed by Western economists as alarmist. They say, there is no alternative. You can't use the yuan because of capital controls. You can't use the euro because it's weak. They are missing the point. The alternative isn't another fiat currency. The alternative is a basket of currencies anchored by gold. The BRICS nations are developing a unit of account. Let's call it the BRICS coin, which is not money you spend at the store, but a mechanism for central banks to settle trade. And the value of that coin will be defined by a weight of gold. This effectively restores a gold standard for international trade while leaving domestic currencies fiat. It is a hybrid model that solves the Triffin dilemma, and the US is completely unprepared for this. Our entire geopolitical strategy is based on sanctions. If sanctions stop working because nobody uses the dollar, our power projection collapses. We would have to rely on actual diplomacy or actual military force, both of which are costly and dangerous. The gold accumulation is the physical manifestation of a desire for a multipolar world. It is a vote against American hegemony cast in solid bullion. And here is the irony. The US could stop this. We could peg the dollar to gold. We have the reserves. But we won't, because to do so would require the government to stop deficit spending. It would require a balanced budget. It would require austerity. And no politician in Washington, Democrat or Republican, will ever vote for that. So, we drift. We drift toward the waterfall while China and Russia build a bridge to the other side. The investor's perspective. I want to pivot back to the psychology of the markets. Markets are driven by narratives. For 40 years, the narrative was, globalism is good, the dollar is king, bonds are safe. That narrative is dead. The new narrative is scarcity. Scarcity of energy, scarcity of food, scarcity of trust. In a world of scarcity, the guy with the paper loses. The guy with the physical asset wins. This is why we are seeing a resurgence in real assets. Farmland, oil wells, precious metals. The tech bubble and the AI boom are distractions. They are great technologies, but they don't feed you, and they don't heat your house, and they don't settle international trade disputes. China understands that the base layer of civilization is physical. You build the physical foundation, gold, energy, manufacturing, and then you build the digital economy on top. The US is trying to build a digital economy on top of a crumbling physical foundation and a mountain of debt. It is a fragile structure versus a fortified fortress. When you see headlines about China's economy slowing down or Russia's ruble collapsing, be careful. Yes, they have problems, Huge problems. But do not mistake economic volatility for strategic weakness. They are willing to take economic pain today to secure strategic dominance tomorrow. The West is not. We trade long-term security for short-term stock market gains. That is the fundamental asymmetry, and that is why the gold is moving east. Gold flows from those who spend to those who save. It flows from loose hands to strong hands. It flows from fading empires to rising ones. This has been the law of economics for 5,000 years. It hasn't changed just because we have iPhones. So, what is the takeaway? The world is fracturing. The one world money of the US dollar is being rejected. We are moving into a fragmented system where trade blocs rely on neutral reserve assets. China and Russia are not conspiring in a dark room. They are acting in their rational self-interest to escape a system that is rigged against them. They are buying gold because it is the only exit door from the dollar prison. For us in the West, this is a signal. The alarm is ringing. You cannot print gold. You cannot hack gold. You cannot freeze gold if you hold it physically. The smart money is getting prepared for a world where the dollar is just one currency among many, and perhaps not even the strongest one. This transition will be turbulent. It will redefine geopolitics, and it will hit the wallets of everyone who isn't paying attention. Don't be the person holding the bag of paper when the rest of the world has moved on to metal. Study history, watch the central banks, follow the gold, and most importantly, think for yourself. The news will tell you everything is fine until the day it isn't. If you found this analysis valuable, I need you to do something for me. Don't just like the video. Share this with someone who needs to wake up. Share it with your family, your investment partners. The more people who understand this shift, the better prepared we will be as a nation to face the reality of a post-dollar world. Stay skeptical, stay prepared. I'll see you in the next one.